Basic technology skills, once in short supply, were quickly becoming widely available. So, we invested in 5 up-and-coming digital capabilities with the potential to deliver major benefits to our clients and high growth for us: interactive, mobile, analytics, cloud, and cybersecurity. But that was not enough. I am an economist by training and temperament, so early on in our journey I developed a new tool to measure the progress of our pivot. We had to develop a way to encourage constant change and know what was working, so that once we became leaders in these chosen categories, we would continue leading. We asked again and again one simple question: what is our revenue and growth rate in the new? Meaning, for us at the time, our 5 new capabilities. By the end of fiscal year 2017, sales in these 5 areas had increased to more than 50% of Accenture's total revenues. By the end of fiscal 2018, they had grown above 60%. As we began to experience dramatic growth, we started sharing these metrics with our investors. That way, they could see that as our legacy core offerings began to slow, we were more than making up for them with new sustainable revenue sources. And because we were not disrupted by technology change, but were instead fueled by it, we proved our potential to continue growing in the future. We were building an engine of constant change, investing billions of dollars back into the business and driving the most significant pivot in the history of the consulting and technology services industry. In fact, since 2014, we have hired an additional 154,000 people, grown revenue by $10 billion, and our market value has nearly doubled to above $100 billion. Accenture's own pivot challenged many core beliefs of our proud corporate culture, but the results speak for themselves. And, as Omar, Paul, and Larry make clear in this audiobook, any business can execute a wise pivot. To be perfectly honest, I wish I'd had the kind of specific, practical strategies this book offers when I came to Accenture 35 years ago. It pulls back the curtain to reveal the how and why of our own wise pivot into the future. And it illustrates that instead of fearing disruption, companies can discover value and drive the new growth needed to pivot wisely and thrive in the digital revolution. Now, it's your turn. Pierre Nanterme, former Chairman and Chief Executive Officer, Accenture. Introduction. Reinventing Reinvention. The CEO of a large professional services firm might have been slightly amused by the irony of the situation, if the problem wasn't as serious as he had come to realize. He and his colleagues had spent decades advising companies around the world on how to move forward as disruption upended one industry after another. Now, as digital technologies, including broadband internet, cloud services, and mobile devices proliferated, his own core consulting business was getting squeezed on both ends. From the bottom, high-quality providers in India were offering global customers low-cost outsourcing for application development and other technology services long important to his company's business. And they were starting to move into higher value-add services that directly competed with his company. From the top, hardware giants and software platform providers were leveraging proprietary software products to convert themselves into massive service companies, threatening to interfere with strategic relationships his company had nurtured with senior executives across the global Fortune 500. Out on the horizon, gathering storm clouds of emerging technologies, including web and mobile-based digital technologies and collaborative social media, were closing in quickly and ominously with the potential to disrupt, well, everything. Economies of scale for technology-based platforms, for example, could soon make it possible for software products to displace large numbers of expert professionals. Even as the company's existing markets faced stalled or declining growth, new value in emerging technology businesses was being picked off by others. The opportunity was there and right in the company's wheelhouse. But management couldn't reach it. It was as if the value were somehow trapped. What was needed was not